Hello, this is Dave, and welcome to Equity Story. I'm with the Wolf, and this is just general share advice and not personal advice. Wolf, how are you doing? Good.
Yeah, I'm good. Thank you very much.
Right.
Hopefully we'll have a good day today. Nice green.
Yeah. Well, the markets were up overnight, and guess what, Wolfie? Of all the fear of if you look right now, if you look at the Dow, you can see that pivot, and that was actually, when was that? Middle of October, when after they had that issue in the UK, and I think you came back from your long holiday, your very long holiday, the 15th of October, we said you need to start buying this market because the market, the money is not going to go into the bonds, right? The you could just see the reaction and the fear of what they had in the bond market in the UK. You could, all these low interest rates for so long have just made the bond market a very scary place with so many countries and so much debt. And again, with property, the whole issue, there is no alternative. And that's why we're talking about, you've got to start nibbling away. Now, even I didn't expect it to get back to 34,000 so quickly, but it's happened. So again, we picked it really well. And if you look at the price action on the Dow, it doesn't look too bad at all at the moment, right? The only danger you've got here is Ukraine, and I think Ukraine is getting more and more unstable. The more the Russians are getting pushed back, the more, for me, the whole thing is getting more and more scary, right? But at the moment, possibly, let us hope we can have a Christmas rally. Whereby, we can see the Nasdaq is struggling. Those stocks are still struggling a little bit. And that's what you're getting, this shift, isn't it, Wolfie, from the values, from the high valuation growth stories into the value stories. So,
and it's still a continuation of that. Absolutely.
Definitely. Now there's a stock in that category, which is CAA, has plenty of value. It's been on a lovely trend, and over the last sort of 2 years, pays a very, very good dividend. We've got this as part of the sort of Equity Story dividend portfolio. You can actually put it on a monthly chart. It's holding trend quite nicely. They came out today with an announcement which was positive, that they said they will still be giving a
surprisingly positive. Yes.
Yeah. So at the moment, it's a hold. But, like I said to you, we talked about this earlier. It's just the way they wrote the announcement, sort of, I didn't like. And maybe this is me just maybe I'm trying to read too much into this, but I just don't like the way they sort of, they come out and they say, on this basis, Capco will be in a position to continue to pay a fully franked dividend. Now, okay, on this basis, it's like, come on, you're a dividend payer. We don't put conditions on it, mate. I know it's what you're saying. When they say that, they're talking about being fully franked or unfully franked, right? But I want to feel more confident when I've got a dividend stock, Wolfie, that they're not going to put me an announcement. They're not going to give an announcement sometime in the middle of the year and go, well, okay, you can get one this year, dividend. I want to be in a dividend company that's always going to be pretty solid on a dividend.
Yeah, look, what you're saying is true, but I think we need to look at the story as maybe as a whole. In other words, this is not one of those infinite dividend payers. This is going to be a cyclical dividend payer, right? So it might have a period of time where the results were going to go their way very strongly, like we've seen for the last 2 or 3 years, and they're going to be paying great dividends. We know that's going to end, right, with the cyclicality of economies and so on. And I think the market has been preparing for that, as you can see, right? It's gone from what, $10 almost down to $7. So they were expecting that the dividends were going to ease off, and possibly maybe, not become as main as they were for the last 2 years. So the market's prepared for that. However, looks like there's an extension for that nice big fat dividend still to come with this announcement saying, the conditions haven't deteriorated as much as we thought. We're going to keep paying that really juicy dividend for you. So a reprieve for the dividends investors out there, and you still hold on probably for another 6 to 12 months with this, with a view that eventually you probably sell out of this and move on to some other dividend payers that potentially are a bit more predictable.
Okay, so explain this to me.
Mm-hmm.
A dividend of 9%, fully franked, it might be a bit more, 11 or 12, roughly.
Yeah.
A P of 3.
Yeah, exactly. But remember, I reckon that profits can go from say like 100 million down to 10 million very quickly, right? Just on the back of margin compression and just the economic downturn. So those dividends can really fluctuate heavily on the back of that. So maybe that P is a little bit too deceptive. However, it looks pretty cheap right now. If you just took a snapshot right now, you think to myself, oh my God, I should be getting into this. But I think the market's saying that's probably going to shoot out that 3 times. It's going to shoot out to maybe 10 times or 12 times in the next 12 months.
Right. So if you're in this for a dividend at the moment, it's a hold.
Yeah, I'd say so. Look, they're just giving you an incentive to hold on because the dividends are going to stay.
Okay, let's talk about Qantas.
Yes.
So we're now Wednesday.
Mm-hmm.
If that's looking like that on Friday after the close, I'm buying that, right? Because that price action looks fantastic. But like you said, it's most probably trading at a record market cap at the moment.
Mm-hmm.
And I said to you, Wolf, does that make you nervous? And what did you say?
No, because it depends on the profits, right, that they make at the end of the day. That's what's going to drive the market cap, I'd say. And from what I've seen today, they are really driving and having the best conditions possible because of pent-up demand, right? And I know the costs, of course, probably are high with the inflation and oil prices going up and so on. But the demand for travel is still extraordinary, and they can probably charge whatever they want really for their trips, right? Domestically. And I've seen over the last week, I've been watching the morning news, and they speak to the travelers and they're going, yeah, well, Qantas are just charging us like, we're going to Europe for a trip from Melbourne to Sydney. But we still have to pay it. So it's interesting, isn't it? So this has always been a trading stock only for me, right? Because generally speaking, traditionally, airlines have just been too risky.
But it's a happening place at the moment. Everybody, even though no one's got any money and they can't pay their electricity bill, we're still getting on planes, flying everywhere.
Yes, and it doesn't matter. We know we will pay $3,000 to go from Melbourne to Sydney.
Well, everyone just wants to get out of Melbourne, mate.
I think the other way around, Dave.
Okay. Now BRI.
Yes.
A new CEO.
Mm-hmm.
It was actually interesting because I did that small cap event, right?
Mm-hmm.
And the guy before me, this was his pick.
Okay.
Yeah, and I felt really stupid, like, because then before we went in the show, I go, "Oh, we really like that one." And he looked at me like I was some knob, as you do.
Well,
but he was a very nice guy, actually. I can't remember his name, but he seemed really intelligent, Wolf. It worried me.
No, look, that's fair enough. Look, Big River, that probably what's been weighing this one down, because it was one of our little plays that maybe you could, trade it up to that 280, 290 maybe, right? Because they had a couple of really good announcements recently. But the change of CEO kills a lot of stocks recently. We've seen it with Elders as the best example of that, right? Which is just unbelievable how it just killed it. But they hiring someone internal. So I think it's a good move. He's been there since about 2018 or 17 or something like that. So that's nice. And hopefully that will ease a few nerves.
Well, you know what? It's holding up really nicely above that $2. It's not quite trending.
Mm-hmm.
But again, come on, dividend 7.49%. A P of 8. The business is growing.
Mm-hmm. Look, if you're in this for a dividend, you'd hold it.
Yeah, but I think I'd buy it even if I think I'd buy it if I wanted a dividend.
Well, I think you're absolutely right. Right now, it's probably a buy on the back. If you are buying dividend stories, you want to buy them close to the trend lines, right? Not where they've gone up too high. So I agree with you. I think that's a pretty interesting take.
All right, let's talk about art.
Mm-hmm.
Because Airtasker, a lot of promise, really failed to deliver. Can you see any? Is the tide changing, Wolf?
Okay. the biggest problem for me for this story was obviously the cash flows, being a negative position and so on, but they're working on that, trying to become cash flow positive, getting there, right? The biggest thing for me was the actual business model where, I've spoken about it and I'm going to reiterate it again, is that you go through Airtasker, you hire someone, they do a good job for you. What do you do then? You speak to that person, whether he or she, on the sidelines and say, look, I don't want to go through Airtasker because I have to pay fees and it just take part of my pay that you pay me. Why don't we just do it privately? You can still, call me whenever you need something and we'll do it. That's the problem with this, right? There's no way of stopping that happening. And that could probably happen every single time you hire someone. So that's one of the big flaws for me. I don't know how they're going to overcome it. That's one of the big flaws for me for Airtasker. Saying that, it looks pretty cheap, Dave. They possibly growing okay-ish. I think it probably will be in the crosshairs of some private equity, right? So watch this space, but I would not be buying it at the moment. I don't buy things just because I think there might be some M&A activity.
Yeah, and the chart doesn't look that good.
No.
Serco.
Yes.
A market darling.
Mm-hmm.
How good the trend lines were on this one, hey?
Yes.
Yeah. Is it gonna recover, Wolf?
It will eventually, unless someone buys them out, like Booking, which they've got 5% of already.
To be honest with you, surely
Mhm.
Booking would be like interested now.
Yeah, absolutely. I think they'll probably take them out, but they're probably just waiting to see the bottom first. The problem with SKO, they didn't get the memo, Dave, telling them that you need to go look at your cash flows and start working on the cash flows to become positive as quick as you can. Otherwise, you'll be trading at 10 cents very quickly. They just haven't still got the memo because they come up today and saying, yeah, we're working on our cash flow positivity. We'll get there in 2025. When I was reading that, I'm thinking 3 years away. That's like a lifetime. There's probably going to be about 5 capital raising in between. No thanks. Pass. Next.
All right. What about TLG?
All right. Let me just say about TLG. It's always been my favorite graphite story, right? You probably know that because it's in Sweden. It's got a really high grade deposit. Working on some anodes in this space, which probably the electric batteries and so on are going to be using them. This is one of my favorite stories in this space. A story for the moment, developing is, of course, the technology. If you're going to play this space, if you're going to play graphite space, because I know there's a question yesterday, remember about 2 days ago about one of the graphite plays in Australia, and I thought, yeah, it's okay, but it's still a story. I actually prefer this one than the other one. And if I'm going to be playing a story in the graphite space, this is the one I do it. And I don't mind the charts, Dave. That's starting to look quite interesting.
It is looking interesting, and I think if this looks like this again, but I'd wait to the end of the week. By the end of the week, I'd be buying it.
Yep.
Now PPE,
Mm-hmm.
because Wolf, we put this on as a trend and it failed, so we had to cut out of it.
Mm-hmm.
Which site? I mean, sorry, you put on as a trend, not me.
Mm-hmm. Give me the bad stuff. Yeah, come on.
Wolf, and the chart looked terrible. It goes down.
Yep.
But maybe this is a time the charts haven't got it right.
Yeah, I think the charts haven't got this right, and I think the chart's telling you that it's not a bad story. It's just there was just lack of interest in the story. I think that's what the chart. So it's a slightly misleading chart, right? Because normally the chart.
Well, the charts just tell you if you're going to make money or not.
Exactly. Right. They don't distinguish whether this is a bad story or just there's just no interest. This is why we need fundamentals to attach to it, to the story, to see where there's actually what's actually driving the downside. So in this case, there's just a lack of interest. So they've gone at just basically today and said, guys, we're very disappointed with the share price performance. We are going very well. We've given you upgrades. We've given you dividends. We are cheap. What's wrong with you guys? Why aren't you following us, right? So the market's probably thinking, well, you're in a space that maybe we're not that super keen about. We're coming into a relatively tough period. Maybe there's going to be a recession around the corner. You're in an employment services business. We got question marks. That's what the market's saying. But you can't you can't fault this company. I mean, they've given everything that you can.
So what are they saying? We're going to let someone buy us, or
yeah, pretty much. I mean, they're doing a review, right? They're doing a business review saying, how can we extract value out of PPE? And one thing is to attract bidders. I mean, that's the only way they can do it, right? So that's what they're doing. They're doing a review, and potentially there might be something in a thing. They're going to package themselves maybe and go, guys, look at us.
Take us out.
Yep.
Right. Okay. Yep. I don't know if life really works like that. People buy you if you want to,
Look, I think maybe there has been some preliminary interest. That's why they've probably gone back and going, okay, well, let's look at ourselves. Let's look at, can we make it really attractive?
Now you've got me interested. I think you've hit the nail on the head there. They most probably, someone said, oh, would you?
Yeah.
Right. And that's when they thought, let's have a look at this.
Yeah, exactly right.
And maybe that bid was a lot less than they want. And they said, well, hold on a second, we've got something here. Let's put ourselves to the market.
Yep. Yeah, look, the story could go just absolutely like that. And you know what?
So is this a Sherlock Holmes buy? Well, is this a
dividend buy, Dave? Remember, we've got this as a dividend play in our portfolio.
Yeah, I know. But is this also a buy after your little bit of Sherlock Holmes that there could be a little bit? So 4%, P of 17, with maybe
going at 20% plus.
With maybe something going to happen.
Yeah, well, they're already in review, right? So something will probably happen. Whether it's good or bad, I don't know. But when you're in a review, we're going to come up with some sort of information post that. I don't know how it's going to long. It's going to take a month, 2 months, 3 months. I don't know, right? There's a definite review going on. I'd imagine at least it will drum up some sort of interest in a story.
Well, it's not trending, right?
No.
But I'm going to go with your instinct here, right? I'm just going to say, you can have a stop loss on it anyway, right? You can say, listen, if it goes below maybe
$3,
$290.
Yep.
Right. Goes below 290, maybe you get out, right? But otherwise, in a difficult market, there could be a winner here.
Yep.
Right. You could have your 10% or 15%. So I think buy PPE.
Okay. Yep.
Buy TLG by the end of the week if it looks good, and buy Qantas by the end of the week if it looks good.
Yep.
But we can certainly have a go now at PPE.
Yes.
Now, CHN.
Yes.
Chalice. Just struggling to get through trend. So this morning when we looked at it, Wolf, it was right on $5.
Yeah.
The market sort of come back a little bit, but oh my wordy me, what nice results. So I'll try and bring them across.
Come on, please. Yes.
There you go. So we can have a look at this, and maybe you can walk us through this, Wolf. 157 meters at 1.7 GT 3E. Now, you've explained it to me this morning. Could you explain it to the members of Equity Story what 3E means?
3E refers to the platinum group metals, right? Which are made up of either five, I think maybe five, I think. Platinum, rhodium, and there's a couple of three others in there. I can't remember off the top of my head. Apologies. So they make up this group of platinum group metals. This is what this initial discovery was for Chalice, and that's what drove them from a small market cap to a plus $1 billion market cap. And this is what sort of discoveries we normally look at. So that died down after a while. After they drilled that out, they come up with a big resource. Blah blah blah. It was all really good, but the market got a little bit tired because then they have to go through the development stage, which is pretty boring, right? Overall, but they've obviously done more drilling, and the results today are unbelievable, Dave. I mean, 157 meters and 1.7 grams per ton of the 3E platinum group metals is excellent in any standard form, right? Doesn't matter where you are globally, because it's a very thick. I mean, 328 meters from, it's not that bad, right? It's, if you get the 157 meters, that's very doable. But the other nice thing about it, they've also got a little bit of nickel and a little bit of copper, which gives them that, if they obviously can extract this successfully and profitably, it will give them a huge bonus to the revenues and the bottom line. It could potentially mean that the costs-wise, this particular project could be quite low.
Do you think it's a chance they would just go for the nickel and leave the copper because the cost to get and have to?
No, because I think it's similar processes anyway. So if you're going to extract one, you're going to just extract the other one.
Oh, it all comes out. It's like cooking, does it? It all comes out.
Pretty much.
Okay.
It's just similar. So if you're gonna extract, you might as well extract the other one. Yes.
Well, my cooking anyway, which is all.
Yeah. Well, you can burn water, I've heard.
Yeah, I can actually. DRE, we talked about this the other day. It's holding trend, and again, some good news today. So definitely, you'd be holding it, Wolf.
Yeah. Look, more results today, and look, I've got a soft spot for this one because they've come up with some pretty good results in the rare earth space, and I really like the rare earth space. So we're looking for something really, really good. So that's WA1. That's the two that probably are, for me, are the best in the space right now, exploration wise. So well worth maybe having a little trade here if the charts demanded, right? So I will leave it to you, Dave, but I don't mind the results again. And from my point of view, this could go places if they keep finding more stuff and keep, progressing the projects.
Well, it's definitely a hold. I think it would go do a little bit more to buy it. Maybe we could look at CDR. Again, it's up. Well, on my system, I've got like a 2.5 million market cap. Now it's maybe let's call it 10. Yeah, what you say? Yeah. It's running a little bit high. It's zooming back down. It's just grab samples. So they just literally with a shovel they just grabbed a bit, haven't they?
Yeah, it's pyramid type exploration, right? So saying that, right? I normally don't take much notice of it when it's preliminary type stuff like that, and just I'm interested in what are they looking for, where they are, and all those sort of things, right? However, in this case, the reason why it's up 110% was actually up almost 200%, right? Up over 20 cents. You look at where they are, so pretty close to Perth in WA at the wheat belt, and they're looking for very similar type stuff to these DREs and the WA1s of the world. So niobium / rare earths / other bits and pieces in there. And the early preliminary stuff indicates there's something there. Whether it's high grade, whether it's large or quantities that demands further exploration, or whether it's low, we don't know as yet. I mean, like I said, the early exploration stuff is fairly basic, just to give you a bit of a sniff what potentially might be around. So watch this space. I mean, I would put this on my radar because they are looking for the stuff that's really been gone FOMO over the last couple of months, right, with DREs and WA1. So put it on your watch list. I wouldn't be buying it today for sure, because that's, like I said, I don't buy it on a bit of sniffs. I want to see some proper assay results and see actually if they're going to find anything at all. So I'm going to put on my watch list. Definitely looks interesting, no doubt. But I'm not excited as yet. But I love the fact that the market cap's so low, so it gives you that potential if they do hit something, five bagger potentially, right? If it's pretty good.
All right. So, and Wolf, why I can understand why they're excited about it, because the market cap is very small.
Exactly.
And if you look at DRE are now on 315 million market cap.
That's what I'm saying, Dave.
Yeah, I get it. I get it. And these guys are what, maybe now 10, 9?
Yeah,
maybe?
that's right. 10, 11, right? I mean, it's obviously not quality, because I had to look through the other prospects and projects they've got all over the shop. I mean, there's just no focus whatsoever, Dave, from these guys, right? So I don't know what they're doing, but they've got these tenements that they've acquired, and they're farming in, and potentially if they actually hit anything by accident, it could go for a wallop.
It's a high risk punt, obviously, right?
Yeah, but I wouldn't be touching at this moment. That's just want to reiterate.
But
right
I'll
now.
tell you what, if it came back down nearer 10 cents, would you nibble?
I could differ, consider it, and see what the plan of action for CDR is, like the drilling, when the results are going to be out, so I can plan my plan of action, right? So I know, say in a month or 2 months time there'll be results, so I'm looking for a bit of a swing and then take it from the swing up, sell out, and then move on.
Wolf, I suppose what we've got to ask, do they have any cash?
That's exactly good question.
let's have a look.
Go on, because that could be the other thing that's problematic, that we could stop it in its tracks.
Well, I mean, they've got a few gold projects as well, haven't they?
Well, they've got everything. They've even got tenements in America. Like I said, there's not much focus there. They're just going for whatever they can possibly get their hands on.
Just trying to think. There we go. Hang on. Let me have a look. Ooh, la 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 la. Bear with me, Wolf.
Yep.
Okay, so they've got 4 million in cash, which is more or less, 80% of their market cap. I just have a look at, what are they burning?
It depends what they're going to be doing. So if they have a big campaign, Dave, that probably 4 million will go pretty quickly. So I'd say within the next 6 months, they'll be asking for cash.
Okay, so it's 3,430,000 at the end of the period.
Yep. So if I were them, next announcement, I'd be probably taking them to their trading hold to take some money. Unless they do it next couple of days. You just don't know, right? Yeah. It depends, like I said, it depends what they've got in plan. If they got now, after this preliminary type results, they get excited and go, guys, we need to drill the shit out of this, right? That's what they do. They probably have to go and spend quite a bit of money to do so.
How much money do you think they need to really drill it?
Oh, look, it depends, how, what the extent is. If I'm going to go for an average type exploration type campaign, I'd say 2 mil plus 2-3 mil. I'd say it would be what I'd be looking to spend. But like I said, it will vary from project to project, depending how deep they're going to go, how many holes they're going to drill, all those sort of things. But I'd say, they could probably do a campaign on that 4 million, but you don't want to leave yourself short by the time you finish it. I'd say within 6 months they'll have to raise for sure.
Yeah. Okay. Interesting story. One for the watch list anyway.
Yeah, put on your watch list because of the small market cap.
CXL fighting back, Wolf. I wouldn't be buying this, but it's
nice announcement last night. In partnership with Cemex on that collaboration that they're doing on one of their, I think, what is it? I can't remember the name of it, but they are looking to decarbonize and capture CO2, right, at a much cheaper costs, and Cemex liking that, and they want to use it. So they're going to be expanding, exploring it even further, and probably commercialize it. So potentially this is why this story has been a market darling for such a long time. It's come back a bit because of course it was probably too expensive. So it might be a trade here and there for the moment. No, but I like the fact that they are still pushing the right buttons.
And lastly, but not least, TNE. I think I called it a take profits around here. Some broker upgrades.
Yep.
It's more or less giving us the same impression, Wolf, short term.
Yeah. So, you've got two. You've got Morgan Stanley Morgans. One has got equal weight. So it's just too expensive for them, right? They're looking at this. They are talking that this is a great company, very quality, one of the best on ASX. I agree with that. So you really want to probably own it in your portfolio. But, the expensiveness maybe is getting to some stuff. But then again, you've got WiseTech that's trading on 100 times. And we talked about it when I first came out, and you asked me, what would I be buying, looking to buy it at? And I said, in the 30s, PE types. So, I'd say in 11s, well, that's what I'd be looking at to buy it. And when you look at the actual numbers for them from Morgan Stanley Morgans, they are going to be trading in the 30s in 2024, right? So either you buy it now and the price is to catch up, so you're going to probably maybe go sideways for 12 months, or it comes back to that 11s, and that's when you buy it in the 30s. It's just simple as that. But I think this is probably one of the better stories on the ASX. So you want to be owning it some point in its life.
Excellent, Wolfie. Thank you very much. Listen, have a wonderful day, Wolfie, and hasta mañana.
Yes, have a great day. Let's hope we can make some more money.
Okay, thanks, Wolf. Bye.
Bye.